Today, our competition is coming from other areas as well, such as the broker platforms that are introducing cryptocurrency. It's only natural that the market would begin with something that is more straightforward, more vanilla, so a Delta One product. Many of our clients have gone on a real educational journey with us over the last few years. We're seeing a big shift here. I think it's great. The BlackRocks of the world coming into the space. It brings more exposure to the asset class within the market. The buzz around those spot ETFs created so much media attention. I think that it's going to be difficult to avoid the noise and the excitement created around Bitcoin. I just see fewer blockers, fewer hurdles created by the SEC to adoption. We're just starting to see pension funds coming and looking at the space across Europe. The fact that they went on that journey tells you that things are changing. I think it's great that we're seeing this decoupling because we can have more diversification from our overall investment. Operational efficiencies is absolutely critical for these businesses, and I think blockchain is going to drive that. What gets me excited now is more on the regulatory front and the fewer blockers.
Welcome to the Onchain Culture Podcast, the podcast where we explore the transformative power of blockchain technology and its potential to reshape industries. In this episode, we talked to Duncan Moir, the new president of 21Shares, a company leading the charge in digital asset investment products. We covered topics like strategic moves in the leadership team right in the beginning, the differentiation of 21Shares in a very competitive market, and the future outlook of digital assets. But Max, tell me, who should listen to the episode and what can they learn from Duncan?
Yeah, we had a great timing with this interview because just a few weeks ago, there has been a huge announcement by 21Shares, who just basically established a new leadership team that Duncan is part of, and they all came from the big UK asset manager Aberdeen. So obviously we wanted to know what's the strategic rationale behind, what's the opportunity Duncan sees in 21Shares, but then also quickly going into their market position and their outlook for the crypto ETP category. What listeners should know about 21Shares is that they're not only one of the biggest issuers of crypto ETPs, but also the ones with the largest offering. And it's interesting for us to get a better understanding of how Duncan thinks about adding new products to the portfolio, but also thinking not only about what new kinds of crypto assets to add, but also what kind of new strategies to enable. And that's something that I learned from this conversation, that it's not only about adding more cryptocurrencies into the portfolio, but hedge funds, trading firms coming to 21Shares and asking access for more sophisticated strategies. So that was interesting. We covered obviously also new pension funds and new clients of investors entering the market, his outlook on digital assets in general, and his also experiences and views on tokenization when he's been at Aberdeen. So this was quite a fascinating conversation.
Totally agree, and that's why I'm also happy to have 21Shares as one of the partners of the Digital Asset Season, Europe's largest educational campaign on exploring the next drivers on institutional adoption and digital assets. From January to March 2025, we have 8 leading partners hosting a 10-week immersive series together with us to explore the most crucial themes shaping the future of digital finance. Anything I forgot, or should we jump into the episode?
Let's jump right into it.
Then see you on the other side. Quick disclaimer before we get started. The content of this podcast is for informational and educational purposes only. It is not a recommendation to buy or sell any financial instruments, securities, or cryptocurrencies. All information is provided without warranty, and the views expressed by the hosts or guests are strictly their own opinion, not financial or investment advice. Please note that we or our guests may hold positions in the financial instruments or cryptocurrencies discussed. And now, enjoy the podcast. Warmly welcome to the Onchain Culture Podcast. Actually, really nice to have you here. And I have to say congrats, I guess. You transitioned from a long tenure at Aberdeen to a new role as a president of 21Shares. How do you have found the initial weeks in this fresh environment? What did you experience so far?
It's been quite a blast so far. You can imagine it's been a busy few weeks, getting to know everybody in the company and getting the feet under the desk, and also out and about traveling between the different offices as well. So we have offices in Zurich and New York and London, and so it's been great to do that and then meet some of the clients as well. But it's been very busy.
Yeah, I can imagine. And the news of your move, along with Russell Barlow and Idil Bashir, if I pronounce it right,
Yep.
from Aberdeen to 21Shares was also quite significant, which usually means there's like a strategic move behind that.
Sure.
But what was the vision shared by 21Co Technologies that basically captivated you to join?
Sure. I mean, like, if you know Hani and Ophelia, the founders of 21 Shares and 21 Co, um, they have big vision for the business. They're quite different. I mean, Hani is very much around the macro, and Ophelia's more around the micro and the detail. So like quite complementary, but they just shared with us this idea of where the business can go, where and how the asset management company 21 Shares can grow as crypto adoption really speeds up. So the myself and my colleagues Idel and Russell come from more of a traditional finance background, but still within alternative asset classes. So we all come from the hedge fund world, running hedge fund strategies, and then Russell was head of multi-asset and alternatives at Aberdeen, and Edel was the chief operating officer for that business. While I ran the digital asset side, we feel that we've always worked a little bit in a boutique as well, like a boutique, so very entrepreneurial. Just seemed like a great fit for us, and the idea of getting more stuck into crypto was very appealing.
Yeah, we will talk about like all the strategies and the visions and plans for this year, but also for the upcoming years when it comes to 21 Shares. But yeah, as you've said, there's also like a bit of a restructuring going on. At least it appears to be like this from the outside, with like a separation of the businesses, a stricter separation between the asset management side of things at 21 Shares. But then there's also the product and technology developments at 21 Co Technologies. I was aware of like their like DeFi tokens products, and I think they just last year, at the end of last year, also announced or did some wrapped Bitcoin products. But could you lay out some further plans that you know of, what we can expect from 21 Co Technologies for
So
the next months?
I'll share what I'm allowed to share, I
Yeah.
suppose. So obviously that's the part of the business that Hani and Ophelia are now going to focus on building, because they're entrepreneurs. They like building something from zero to one, and I guess 21 Shares is already at one, and we're trying to take it to the next level. But at technologies, they're really focused on everything on chain. So they're working on AI powered on-chain data solutions that they can take to market, as well
Mhm.
as products such as the ones you mentioned, where they're helping people make better use of, let's say, their Bitcoin holdings. You mentioned the wrapped products, but they've got a lot more things in the works, and I think they'll be excited to share some of that soon.
Yeah, definitely looking forward to that. But now it's like shifting more to 21 Shares, obviously. What's your mandate as a president? So how can we imagine your role
Yeah,
for now?
yeah, it's a fairly non kind of descript title, I suppose. Can mean a few different things, but for me specifically, I'm really focused on more of the growth of the business. So product innovation, the marketing side, research, very uh, outward facing, I suppose, in a way, and seeing where we can take the business to its next stage of growth. And then I have, obviously my colleagues Russell Liddell, and then I should say also Andres Valencia, who was already at 21 Shares, and he completes the executive committee with us. So between the four of us, we're able to cover the areas of growth, the sales, the business operations, and the investment management operations with Andres.
And how do you see 21 shares like and its position currently in the market? If we look back, especially at last year, I think ETPs or ETFs in general, they've been like one of the main stories in digital
Yeah.
assets, and I guess they will continue to do so. And with the market like increasing in size and more investors coming in, I feel like the like competition is also getting more fierce just naturally.
Yeah.
How do you see 21 shares being positioned in this market?
No, look, it's a really I think it's a fair observation and quite correct actually that there is more competition. I mean, if I step back even several years ago, actually, 21 Shares is a company that I've actually admired for quite a while. So, in my prior role, I was building out solutions that would I could have competed with them as well. And it was always a company that I thought, wow, they're really market leading. They're really kind of pushing the industry forward in terms of new product innovation and the assets that they offer. And so they've been able to stay top of the game as a result of that. So I think today I would still consider 21 Shares as the market leader. But as you mentioned, there's more and more competition coming into the market. And I don't see our competition as just the most obvious peers, so the other ETP providers.
Mm-hmm.
We were originally set up to make investing in cryptocurrencies easy. Now we do much more than that. Now it's about efficient access, just more than just easy access, and that we create efficiencies through capital markets, through sourcing liquidity. But today our competition is coming from other areas as well, such as the new broker platforms that are introducing cryptocurrency, the cryptocurrency centralized exchanges with their apps themselves. I would also see those groups as somewhat as competitors because they are solving part of the problem that we were originally set up to solve, and so that's places greater emphasis on our need to continue to innovate the product offerings. So the assets that we offer and the way that we offer them to clients.
So innovation for you means continuing the path of offering as many good products as possible, because that's something that's also what 21 Shares stood for.
Yeah,
Yeah.
I mean, look, I would say new products, but also continuing to look at the problems that clients have and trying to solve for that. So it's not just the asset, but it's the way that they invest. The actual vehicle potentially will change over time. The
Mm-hmm.
type of exposure. So today the market is very much beta one, delta one products. It might move in the future to something more esoteric, and we will obviously need to move with the market, and as we have in the past, pioneered that market.
Can you elaborate on that one? That's interesting. For me as an outsider who is like not too much
Yeah,
into the ETF world, what does it mean to offer more esoteric products?
yeah. So like if you think about the market maturing over time, so it's
Mm-hmm.
only natural that the market would begin with something that is um, more straightforward, more vanilla. So a Delta One product, long only, BTC, ETH, Sol, etc. And arguably some clients are more adventurous, more willing to go into some smaller, more niche products. But many of our clients have gone on a real educational journey with us over the last few years, and they're now looking to different types of exposure. So structured products, for example, principal protected solutions where we can cap the downside in their exposure. There are some clients looking for more yield as well from the products. Some may want delta neutral exposure, so they don't want exposure to the market movements. They just want to capture the yield in there, sort of an arbitrage solution. This is only this is natural evolution of the market. We've seen it. Like I said, I came from the hedge fund world. This is exactly what we saw within the hedge fund industry. Is as the market matures and investors become more educated, they start to explore new areas within an asset class.
And that sounds to me like you're talking, like when I think about, okay, which kind of clients are interested in such products, that sounds to me like clients that have been in the market for quite some time already, and they are now ready to embark on their next journey and go deeper and go more sophisticated. Is this also like, could you describe the type of clients that you are aiming the strategy at, and how this might also differentiate to other like issuers in the market, just to get a little bit better understanding of who are you serving?
Absolutely, and we've had custom clients that have been with us for a very long time, and we've been running products since 2018, or issuing products since 2018, and so got very long-standing relationships with clients. The ones that are looking at the more complex strategies are the more institutional clients, so trading shops, hedge funds, prop desks, these types of investors. We expect to see a bit more interest from the private bank segment for these types of products as well. Private banks are turning more and more onto crypto, and structured products tends to be a very good home for, private banks tend to be a very good home for structured product offerings, because they can be tailored to specific client needs. But they're definitely on the more sophisticated end of the spectrum, and will continue to offer products for the retail market that are appropriate for them as well.
Is it like these new kinds of products, do they fall in the bucket of like actively managed funds? Because that's something that I knew of, or that I associate you with for 21Shares, is like a big focus already, like a big early shift into offering also indexed kind of products, but always like passively managed. Yeah.
Sure. Well, I mean, if with any exchange traded products in Europe, we need to be careful about the strategies that we offer. So we cannot offer discretionary active strategies within the ETPs. They need to be rules based. You can have some rebalancing in there, and we do today have rebalancing in some of our products. So you could expect to see some more, you could call it active, but it's very, very rules-based approaches. The way I would think about it, or the way that I do think about it in terms of product innovation, is you can have existing capabilities and existing clients, and new capabilities and new clients. You can take existing capabilities to your new clients, and you can take new capabilities to existing clients. But trying to take new capabilities to new clients is actually a very difficult thing, because you're having to tell a completely new story around your new capabilities to a completely new client segment. Very challenging thing to solve for. So you would probably expect to see us move in one direction, but not in both directions, if that makes sense.
It's time for an ad presented by us. While you're enjoying the conversation, let me give you a quick rundown on what you have missed during this almost 10-week digital assets season, as we're approaching the end of it. The season included 3 exclusive events in Zurich, London and Frankfurt, and you can check out the recap on our socials, such as 2 industry calls, where you find also all the recordings on our YouTube channel. We also conducted podcasts and deep dives with our 8 partners like Solana, Deca, DLT Finance, Fireblocks, Kiln, Near, Tradias and 21Shares. And we explored the next drivers on institutional adoption and digital assets. Feel free to check out our website w3.vision to find all the insights that we've made. You can already contact us for the next season, which will be all about institutional DeFi. And now let's get back to the episode. And now just thinking about how you're currently positioning yourself, and also what you've mentioned up until now. You mentioned that you want to make it easy for people to enter crypto, and you also talked about the competitors your competition. But I was still wondering, as these traditional finance giants, so to say, make also their way into the crypto space, do you think this will be more challenging for crypto ETPs like those offered by 21Shares?
I think it's great. I really, I mean, you're talking about, the BlackRocks of the world coming into the space, right? I think that's fantastic, and we were really excited about the announcement they'd be coming in, especially endorsing Switzerland as a domicile, because we're obviously a Swiss issuer. The reason that we're excited about that is because it brings more exposure to the asset class within the market, and it switches more people on to the notion of looking at cryptocurrencies. And we're comfortable with that because we've got the track record. We've got the assets in the space. We've been through the bear markets and the bull markets. So when investors do come to looking at products for investment, scrutinizing issuers, we think that we're going to come out looking very good in that situation. So no, I think it's great, and I've seen firsthand how that's, from a prior role, the impact that BlackRock spot Bitcoin ETF success in the US had on the impact of that on other markets in the UK, where cryptocurrency derivatives, which include ETPs, are not eligible investments for retail. There's still the buzz around those spot ETFs created so much media attention that all the brokers were getting lots of inbound requests from individual investors looking to get exposure. So we know the demand is there, and it's created by the biggest names of the industry within the asset management industry coming into the space.
Okay, interesting. And like more switching into your market outlook, I mean, 2024 has been a big year for digital assets with a lot of changes in the economy. And you've mentioned the crypto spot ETFs and all the stuff happening in the US. What would you anticipate will be the most significant narrative for this year? So looking into 2025, do you see Bitcoin still being on top, or are other cryptocurrencies catching up on that?
Like I think that it's going to be difficult to avoid the noise and the excitement created around Bitcoin and what's coming out of the United States. So I don't know if I necessarily expect this to happen, but if it does, the strategic reserve would obviously be one of the key drivers of buzz around Bitcoin, and probably for crypto in general. For me, the most significant thing is actually just, it's not a specific action. It's almost, let's call it inaction, in that I just see fewer blockers, fewer hurdles from created by the SEC to adoption. So we expect to see more approvals from the SEC for other spot ETFs in the US. That's going to be a great boost, give a great boost to the industry. Some people are expecting the UK retail ban to be dropped. It probably feels a little bit unlikely to. It'll probably happen tomorrow. Now I've said that, but if it's unlikely to us that that's going to happen this year. But when it does, that will be a really exciting point for the industry, and everybody in Europe is obviously waiting on ESMA's decision on whether to make cryptocurrency and cryptocurrency derivatives, being decided separately, eligible investments for UCITS. So those are some of the key things that we are really looking out for.
Mm. And with that coming in, are you noticing new industries or these like client segments that were previously not really interested in digital assets, but now really show their interests?
Definitely. I mean, I mentioned private banks earlier. We're seeing a big shift here. You can sometimes expect private banks to be earlier in adoption than the largest institutional investors. And in the case of cryptocurrencies, we're definitely seeing that within Switzerland. So going beyond what was execution only trades, where clients are directing them to go and invest on their behalf, to more advised mandates. I think that's really, really exciting. And we're just starting to see pension funds coming and looking at the space across Europe.
Out of
Yeah.
Oh, sorry, I didn't want to interrupt you, but out of these, was there something that was rather unexpected?
No, look, oh, I mean, I can tell you the most unexpected thing that happened. It happened last year, late last year, and that was the a pension fund in the UK making an allocation to a 3% allocation to Bitcoin. And the fact that they did it was a surprise. The way that they did it was a real surprise, right? They did this is a direct investment that they made, and they're not a big pension fund. So they obviously went through a huge amount of due diligence to make that they made that investment and went through procurement of service providers. And so it's super interesting that they did it. I will say that I would be surprised if they were able to access that Bitcoin more efficiently than if they had just gone through an ETP, which they would have been able to do because they're an institutional investor. But the fact that they went on that journey tells you that things are changing.
What does, like, speaking of this pension fund, what does like the general adoption trajectory look like? Is it other pension funds have to see their competitors or their peers to make allocations, and then they start reviewing it on themselves, or what's the dynamic, the industry dynamic? Because at this point, I'm somehow like the numbers speak for itself. We have a track record of Bitcoin for now over like 16 years, and you can see, and also with BlackRock and so on, and their studies and research papers that they publish, it seems like there are not too many counter arguments anymore when it comes to having like a portfolio allocation of 1 to 2% to just get like the toe into the water.
Yeah.
So I'm thinking about, is it still regulatory, or is it more like just this like normal career dynamic that you have to see your peers stepping into in order to follow them?
The FOMO.
Yeah,
Look,
exactly.
I think you're right. There are probably not that many reasons not to do it today, and exchange traded products would be the obvious way for them to easily access the asset class. But the question you ask is actually it's interesting because it is quite region specific on how these decisions are made. So if I take the UK or the United States with public pension funds, they're very, very guided by their consultants. So they will have consultants at the overall plan level coming up with strategic asset allocations, and then they will have consultants within at the asset class level helping them pick underlying investments. To get those markets to shift, you will need more and more consultants adding cryptocurrency to either to the strategic asset allocation or at a minimum into the tactical opportunistic bucket, which usually does exist. And then they will need to say, you should do this, make this investment. So they're going to have to do an assessment of what's out there for that to happen. And the pension fund that I referred to, we don't know who it was. The market doesn't know who it was in the UK, but they were advised by a pension advisor. So that's what's really interesting. That pension advisor is supposedly who has been encouraging them to do it, which suggests they're probably doing the same with other clients.
Mm-hmm.
So we need the consultants to change it. Europe they have a little bit more flexibility, but generally speaking, if it doesn't fit into the strategic asset allocation, which tend to be very, very long-term models, it can be quite hard to get it into a portfolio.
And for them, it just takes time and further education, or is there any like substantial obstacle in the way that you are working on to solve?
They tend to have approved so eligible assets as well, even within the pension funds. So they would need to go through various committees to have that changed. Like I think it's have a background in quantitative hedge funds, systematic investing. And so if you look at it quantitatively, it is actually quite difficult to model for in your portfolio because you feel compelled to ignore the first, let's say, 10 years of performance when it was such a nascent asset, and the numbers look so ridiculously good that you don't want to almost consider it in your portfolio. So when you're trying to do forward-looking projections for in terms of return, risk, the correlation to risk assets, it can actually be quite difficult to model for. And that may be something that is stopping a lot of allocators from going in further.
Maybe one follow up on this one before we like transition into your broader view on how this technology also will impact asset management in general. But I cannot. I have to wonder that we've also seen somehow of a divergence when it comes to crypto assets. So it used to be, okay, Bitcoin is like the leading crypto asset, but it's also like other crypto assets, altcoins are more of a beta also to Bitcoin.
Yeah.
And when Bitcoin moves, there's like a transition or like a period of time, and then the altcoins will move for accordingly. But now I think also with changes in market dynamics and market structure, I think there's an argument to be made that we see some kind of a divergence in these crypto assets. And I would be interested in your view on if you slice the market now differently. Is Bitcoin like the digital gold case, and then we have like technology platforms like layer ones, and then there are like new like financial infrastructure protocols, or how do investors also have to take a look at the market, which is getting increasingly diverse?
I feel like you've taken the words out of my mouth there. I mean, this is exactly how I see it. I think it's great that we're seeing this decoupling, but by the way, because it when there's a correlation one across all the assets, investors, it's almost choosing a different protocol is almost pointless. But now we have this lower correlations, this decoupling, we can have more diversification from our overall investment. And yes, I do see Bitcoin as being different to the others. And I do like the idea now of categorization. I used to think that the whole taxonomy thing was almost pointless, because it really it was. They were all doing the same thing. And now we're seeing it really matter. And in the future, I would expect some chains to be most useful for certain use cases and some for others, which means they're probably going to be more applied to certain types of, maybe not sectors, but like the kind of the nature of a business. So businesses that have very high supply chain usage may use one type of blockchain, and a business that's focused on payments may use another. And that means we may those cryptos may start to correlate more with the growth in those areas, whether it's an industry or kind of a market segment on a regional basis. And that's really exciting for fundamental investing as well, right? Both fundamental and macro, in fact. And it's great for, you mentioned active strategies earlier on. It's great for active strategies as well. And I'm sure lots of fund managers will be excited to see that.
In your prior role, you not only have taken a look at crypto assets as an investment case, but also as a technology to build on. So I know that Aberdeen has been quite active in the fields of tokenization, making strategic investments and so on. How do you think, now talking more about the technology and its impact on finance, how do you see things play out over the next years when it comes to the adoption of blockchain technology in asset management?
I think it's going to be transformational. I'm not just saying that, but the financial services and asset management in particular are very slow to adopt new technologies into, areas. Groups like hedge funds can be very good at looking at new investment strategies, but from a technology perspective, they tend to be a bit slower, operationally slower. And the same is true across the majority of investment management. And in an industry that's actually very challenging, you have more and more challengers coming out, more and more digital kind of native applications, platforms challenging their business models, and they're doing that very efficiently. The asset management industry needs to become more efficient, and unfortunately, fees are going in one direction. right? So the margins are getting squeezed. So operational efficiencies is absolutely critical for these businesses, and I think blockchain is going to drive that. And that's why I'm so excited about blockchain tokenization, the use of DLT, and I think at 21 Shares we do perform a pretty vital role here in one, giving investors the ability to profit from the growth and the adoption of blockchain, but two, we are in a way providing financing to the industry because more flows come into our product, prices will see some upward pressure, treasuries will grow, the treasuries of foundations will grow. That will allow them to invest more back into the use of their chains, grant giving, technology upgrades, etc. So I think it all comes together quite neatly.
And as you've mentioned, operational efficiency. It's interesting because I think there have been two approaches so far in asset management and adoption of DLT. There's the one camp that is thinking about, primarily thinking about DLTs as driving this operational efficiency and thinking about, okay, how can I somehow improve and increase efficiency in my backend processes, make automation and so on. And then there's the other camp that has, and it does not it's not either or, but the other camp and their approach to the market is more thinking first about how can I use this product to build new products that might tap into a new segment of clients like crypto native investors, and they've been focusing on building new tokenized products that crypto native investors can invest in. What do you think for the current stage of the market? Which strategy is better, or do you have to do both?
No, look, I agree with you. It's not either or. It's which one when. So it's I think the when I started looking at this, I was probably in that latter camp. How do we do new things, new products, grow assets, but recognize that actually the time is for operational efficiencies. The market's not quite there, mature enough for the product growth side yet. Mm-hmm. It will come, and I can say that's also much easier to get approval for in an industry that is challenged. Your CFO is very happy to hear about operational efficiencies and cost reductions, and then the chief client officer or head of distribution or whatever is happy to talk about the new product growth as it will come in the future. But you look at the investments that are being made by asset managers today and banks. It's mostly around efficiencies and cost reduction, and in the future, tokenization of assets, funds will come. But I absolutely believe we'll get there.
Mm-hmm. So maybe summing up the conversation and then tying it all together, is this also the field that you are most excited about when it comes to this year, together with new kind of products that you are going to launch, or what makes you excited when it comes to this year?
What makes me excited? I think we've had a good bull run so far, and again that then helps treasury. So I think most protocols are very well placed to go and invest back into the industry. So what gets me excited now is more on the regulatory front and the fewer blockers. I definitely expect tokenization to be a hot topic this year. Stablecoins will continue to be as well. So fast payments. These are some of the things that are going to drive the industry overall forward. And then you have all the real niche, the cool things, like AI agents. You have this fascinating market in meme coins. Some people love it, some people hate it. But that will probably be another talking point in 2025 for the industry.
And is the bull market over, or do we see the continuation?
Look, I think the bear market will come at some point. I can say that with near certainty, let's say. but I feel that we've got a long way to go before then, and so this year at least, I feel really positive about where we are, where we're going.
I think that are quite some positive notes to end this conversation on. What do you think, Vicky?
Nothing else to add. Thank you. That was good.
Amazing. Thank you both.
Thank you very much.